The year is 2025. The global economy, still reeling from the aftershocks of a pandemic and geopolitical tensions, faces a new threat, a full-blown trade war between the United States and China. This is not the first time these economic titans have clashed. However, the latest round of tariff escalations, reaching unprecedented levels, threatens to disrupt global supply chains and reshape the geopolitical landscape. The stakes are high and the outcome uncertain. The seeds of this conflict were sown decades ago. A complex web of economic interdependencies coupled with growing political rivalry has created a tinderbox ready to ignite. The immediate trigger for the latest escalation was the imposition of a series of tariffs on goods traded between the two countries. These tariffs, starting relatively low, have spiraled upwards at an alarming rate, with each side seemingly determined to outdo the other. The economic rationale behind these moves is complex. Proponents of tariffs argue that they are necessary to protect domestic industries from unfair competition and to reduce trade deficits. However, critics warn that tariffs are ultimately self-defeating, leading to higher prices for consumers and businesses and ultimately harming economic growth. To understand the current trade war, one must delve into the history of US-China trade relations. Since China's economic opening in the 1980s, trade between the two nations has exploded. Chinese goods, often cheaper due to lower labor costs, flooded American markets. This resulted in a ballooning trade deficit for the US. The trade deficit, a contentious issue for decades, became a focal point of the Trump administration's economic policy. The administration argued that the deficit represented a loss of American jobs and a threat to national security. They saw tariffs as a tool to force China to make concessions and reduce the imbalance. However, the situation is far more nuanced. The trade deficit, while large, doesn't tell the whole story. It doesn't account for the profits American companies make from selling to China, or the benefits American consumers enjoy from lower-priced goods. Moreover, China's rise as a manufacturing powerhouse has been fueled in part by American investment and technology. The trade war has far-reaching consequences, impacting not just consumer goods, but also critical sectors like energy. The global energy transition, already facing significant challenges, is now caught in the crossfire. For instance, the US solar industry, while less reliant on Chinese panels than in the past, still depends on imports for key components like cells and polysilicon. Tariffs on these components could slow down the deployment of solar energy, hindering efforts to combat climate change. Similarly, the electric vehicle industry, a key driver of the energy transition, faces significant headwinds. The US relies heavily on China for lithium-ion batteries, a critical component in EVs. Tariffs on these batteries, coupled with tariffs on raw materials like lithium, could increase the cost of EVs, making them less affordable for consumers. Adding another layer of complexity to the trade war is China's dominance in rare earth elements. These elements, crucial for a wide range of technologies from smartphones to wind turbines, are not actually rare in terms of global reserves. However, China controls a significant portion of their production and refining, giving them considerable leverage. The US, heavily reliant on Chinese rare earths, has found itself in a vulnerable position. While efforts are underway to diversify supply chains and increase domestic production, these initiatives will take time to bear fruit. In the meantime, China's control over rare earths gives them a powerful card to play in the ongoing trade dispute. Section 5. The global economy braces for impact. The trade war's impact extends far beyond the borders of the United States and China. The global economy, already grappling with slowing growth and rising inflation, is bracing for further turbulence. The tariffs are disrupting global supply chains, forcing businesses to rethink their sourcing strategies and navigate a complex web of regulations. This uncertainty is leading to higher costs, which are ultimately passed on to consumers in the form of higher prices. Central banks around the world are closely monitoring the situation, weighing the potential need for intervention. However, their options are limited. Interest rate hikes, a traditional tool to combat inflation, could further dampen economic growth. The global economy is walking a tightrope, and the trade war is adding to the instability. Section 6: Tesla at a crossroads, a microcosm of disruption. The automotive industry, a bellwether of the global economy, provides a stark illustration of the trade war's impact. Tesla, the electric vehicle pioneer, has found itself caught in the crossfire. Tesla's decision to build a factory in China, once hailed as a strategic move to tap into the world's largest EV market, has become a liability. The tariffs have made it more expensive to export cars from China, forcing Tesla to reconsider its production plans. The situation highlights the challenges faced by multinational corporations operating in a world of escalating trade tensions. Companies are being forced to choose sides, potentially jeopardizing their access to key markets and resources. Section 7: Emissions, a double-edged sword. The trade war's impact on emissions is complex and multifaceted. In the short term, the economic slowdown caused by the trade war could lead to a decrease in emissions. Reduced industrial activity and consumer spending could translate into lower energy demand and fewer greenhouse gas emissions. However, this short-term dip in emissions could be offset in the long run. The trade war could hinder the development and deployment of clean energy technologies, slowing down the transition to a low-carbon economy. Moreover, the trade war could lead to increased reliance on domestic fossil fuel production, further exacerbating climate change. Section 8: Can cryptocurrencies offer a lifeline? As the trade war intensifies, businesses and investors are seeking alternative financial systems to mitigate the impact of economic uncertainty. Cryptocurrencies, once a niche technology on the fringes of the financial system, are now being considered as a potential lifeline. Cryptocurrencies like Tether offer several potential advantages in the context of a trade war. Their decentralized nature makes them resistant to government interference and manipulation. Transactions can occur directly between parties, bypassing traditional financial institutions and their associated fees. Moreover, some cryptocurrencies like Tether are pegged to stable assets like the US dollar, providing a hedge against volatility. This stability could be particularly appealing in times of economic turmoil, offering a safe haven for investors seeking to preserve capital. Section 9: Navigating the storm. A call for cooperation. The escalating trade war between the US and China poses a significant threat to the global economy and the fight against climate change. While both sides have legitimate grievances, the current path of confrontation is unsustainable. The only way forward is through dialogue and cooperation. Both sides must be willing to come to the negotiating table and address their differences in a constructive manner. This will require compromise and a recognition that a trade war ultimately benefits no one. The world is watching, hoping that these economic giants can find a way to resolve their differences before irreparable damage is done. The stakes are too high and the consequences of failure too dire to allow this trade war to continue unchecked.